following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network, the oldie but the goodie, the Options Insider Radio Network. And, of course, joining me today on the Option Block All-Star Panel, we actually have a bit of a truncated panel because the boys from the pit couldn't make it today. They're busy off doing their gold courses or their silver courses or whatever it is they actually do over there on a daily basis. But don't fret, dear listeners, because we are indeed joined by the rest of our all-star panel. Starting off with the man known to many by simply the name Viceroy. He is none other than Alex Jacobson from Options Express. Mr. Alex, welcome back to the show, sir.
Thanks, Mark. Good to be here. It's my first show since I sit down between the options and futures desk, and so you can kind of hear the noise level. This is an exciting place to be during expiration week.
It definitely has a little bit more life in the background.
Oh yeah, it's interesting because, as I say, the options desk is to my left and the futures desk is to my right, and the amount of traffic, the amount of phone calls in that last 10 or 15 minutes, just, I say it's my first time, just astounds me how much stuff is going on, positioning for tomorrow's expiration, and how many positions have traded through strikes, and listening to the desk, it's, somebody who grew up in a floor environment the way I did, it's an exciting place to be.
Gives you a little bit of that old rush again, huh?
Exactly. I was looking for a non-explicit term for that, but that's exactly it.
I have a few in my repertoire for when Sebastian's not around, and we can have a clean show instead of the usual gutter trash.
It actually was a rush. It actually is fun to be here today.
Well, we're glad you're enjoying it, sir, so keep that jaunty cap ready because we're about to dive in, but one more person has joined our all-star panel, beaming in all the way from the lovely principality, the duchy, if you will, of St. Charles, Illinois. He is none other than Uncle Mike Tusaw, formerly of Know Your Options Inc., and now with RCM. Uncle Mike, welcome back to the show, sir.
Always happy to be here, and I always feel good when I hear Mark Longo say the word duchy.
Yeah, that can go a number of different ways, so perhaps we'll just leave it there. All right, and with the team assembled, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the Trading Block. This is indeed the portion of the show where we peer into the day's worth of market action and market activity and highlight a few interesting developments that may have caught our eye. And it was, for the most part, a relatively mixed, a relatively modest day. The major indices closing fractionally up or down, but certainly no massive movements in the broad indices. VIX cash commensurately selling off a little bit, down about a third of a point or so to hovering right around 12.66. So VIX cash hovering right in that range we've been talking about for quite a while. Nothing really going on to jazz up the volatility levels. We had a little bit of news coming out this morning. GM coming out. We talk a lot about Ford on this show, but we don't talk about GM as much. And GM coming out with profits taking a bit of a hit from 2011, a lot of it having to do with accounting charges and all that fun stuff, but the market not exactly enthused with their results and taking the stock down about 3% today as a result. And so a lot of interesting paper going up out there, but for the most part, the market not liking what they're seeing in GM land, which is surprising because their competitor Ford did finish up a little bit on the day. So there was some love for autos, just not in the GM land. We also saw jobless claims actually decreasing from expectations of last week. People had forecast much higher jobless claims than they actually came in, which is showing some demand on the labor side, which is also bullish, and yet the market kind of shrugged that off as well. We don't have Andrew here, so I can't give him a hard time about Zynga, or praise him indeed for Zynga, because he was indeed pretty early on that Zynga train. But Zynga, of course, having a wild ride over the last few sessions, rallying all the way to almost to $4 and then coming off substantially today, down about, or actually mostly yesterday, trading down about 3.25 now today. So hovering back around that 3 handle again. It looks like perhaps some of the flame has died out there in Zynga land, but there was some Zynga bulls really driving that up for a while there. Not just Andrew dumping thousands, nay tens of thousands of the 2.5 puts. But aside from Zynga love and some other stuff going on in GM land, what caught your eye in today's activity, Mr. Mike?
Well, not a lot actually. We had a little bit of a bump up in Google, but not too much. I'm looking at Apple, that's flat, and really kind of a boring day on my radar screen.
Alex, Senior Viceroy, same question to you, sir. What, if anything, really caught your eye in today's activity?
Facebook and BlackBerry. I got to be careful not to say research and
I have a hard time with that one too. I still say RIMM. I still look up RIMM. It still works, thankfully, but it's kind of annoying, you know.
Yeah, they both caught a bid today, and 3 weeks ago we were all over Facebook, and then it got quiet again. But Facebook was on the radar screen today. I'm going to say RIMM. I just said I won't say it. BlackBerry caught a bid today. 3D Systems got beaten up a little bit today. As I say, I sit right across from the desk. Green Mountain was a name that clearly had a lot of activity today because I heard that on a number of phone calls. So there were pockets of activity today.
Let's hit on RIMM/BlackBerry for a moment there, because that's an interesting one. They closed today at $15.08, up about nearly 8% on the day, or over a handle today. On really the bulk of the news in BlackBerry, I think most people would consider it to be resoundingly bearish, which is their former CEO still had about 5% of the company in equity, and he dumped pretty much all of that today. That's usually not a sign that they have bullish long-term prospects for your company. If he did, he probably would keep it on and hopefully employ some of the hedging strategies that we talk about here on this show all the time, or indeed hire someone like Uncle Mike to go out and do that for him. But he instead decided to dump, like I said, I think it was about 5% of the outlying or outstanding float there in BlackBerry, and yet the stock rallies a point on that news. So perhaps there was some other bullish news coming out that I'm not aware of. The market overall seems to be faring rather well, or handling rather well, or I should say BlackBerry really is faring rather well. See, I did it. Actually, I said it right. I said BlackBerry. So there you go, Alex. I'm catching it finally. But BlackBerry seems to be faring rather well with the post-BlackBerry 10. I know the initial reviews, people were excited, and then they kind of seemed to have sold off a bit in the wake of that. People were saying this is not really going to be enough to turn the tide, and now it seems to be holding steady a little bit again. So perhaps some of the bloodletting has finally ceased over at BlackBerry, and people are going to play the wait-and-see game. I'm not overly enthusiastic by what I've seen of BlackBerry 10. I don't know if it's enough. It would have been cool perhaps 2 years ago. The fact that it's been delayed probably over a year now really doesn't seem to be helping it. And it's kind of one of these things that's too little too late. If you want to unseat the iPhone, if you want to unseat Android, you really have to bring something radically different and radically better to the table. And if you're just bringing something that's on par with the leaders, usually that's not the best strategy to unseat them. Also, Alex, interesting news coming out today. We wrote it up on the Options Insider. You can find this story and, of course, all the stories we're going to talk about today over there at theoptionsinsider.com. If you're looking for news stories in particular, you can scroll on down to the news feed. You find that on the lower right portion of our homepage. And Alex, you're a former CBOE guy. I was, a member of the CBOE for a number of years. You, of course, are familiar, as are most people on this show anyway, with the numerous hurdles and really obstacles they had to overcome and perhaps force their way through against a lot of people's opinions to the contrary when they went public a few years back. People thought it was a dumb time to do it. They were forcing the issue. It really was perhaps a very bad time. They had missed the peak of the frenzy and bidding wars for seats, and it really didn't seem like a great time, yet they forced it through anyway. The IPO promptly sold off shortly after it listed. I think it got up to 34, then turned around, never looked back, got down to the low 20s. I think it might have even broken 20 briefly there. Of course, post ICE acquisition deal for NYSE, CBOE has been looking great. It hit 35.70 and it closed at today roughly. And so that's been they've caught quite a bid post that deal. And of course, today comes this comments from Ed Tilly that they would consider indeed going private again, which made me just really scratch my head. Of course, to his credit, Ed probably was responding to a reporter's question or an analyst's question about would you go private, and all this talk of NASDAQ perhaps potentially going private and all these other exchanges going private. But they said they would consider it, which to me, I guess you have to give that answer. It's the politic answer to a question like that, but still, the concept, the notion that they would then, after all that effort, all that rigmarole, all that consternation they dug up to try to go public the first time, to then go back and go private again. I don't know. That would seem to me to be an odd state of affairs. What do you say to that news there, Alex, that they would even consider such a thing?
Well, there's two things. Number one, being a public company has got some real expenses attached to it. And if you look at all the exchanges since coming public, they've been much more P&L conscious. I mean, as they should be, but the time to have taken them private would have been at $18, $20, but you would have had a stockholder revolt. To your point, there's a lot going on at CBOE. Brodsky is in the process of leaving. There's, the stock for a lot of people for the first time is above break even. So I think there's a lot of smiling faces there. The special dividend was paid. But, it's a tough business. There isn't a day that goes by that I don't get a call from somebody, an old friend in the industry asking me about the CBOE stock. And I don't think it's that easy of a deal in terms of who was going to buy them. When I was at the ISE, we did a lot of competitive intelligence, and we spent a lot of time looking at potentially who would take the CBOE. And we always thought if anybody took them, it would be the ICE, not the CME. I'll live to regret this, but I don't think the CME has that much appetite. And it's not that the CBOE isn't a great franchise. It's the real estate. I mean, that building is probably worth, or at least when I was there, it was carried on the books with all the technology in the neighborhood of $1 billion. So to save money in the consolidation, you got to do something. I mean, they finally got the Board of Trade building sold. But I know this is kind of a silly question, but what do you do with the building? Who's going to give you $1 billion?
Yeah, in this day and age, they're certainly not going to use it for a trading floor anymore, that's for sure.
Yeah. I mean, it's a better environment in terms of downtown real estate, but it's not a great building in terms of things you could do with it. I mean, the joke was before they built the library, it would have made a great library. But it's got a library down the block from it.
So you came down on the ICE side of the equation. That's interesting. I think most people will probably lean towards the CME just because it seems to fit so well. But there is a relationship there between Sprecher and CBOE and ICE and CBOE. So perhaps there is something to that, perhaps. It's interesting too. You mentioned the going private. It seems to be, this time last year on the show, we were getting the rumors of perhaps an impending Facebook IPO, and everyone and their mother was racing to go public. We saw, LinkedIn going public. We saw all these Web 2.0 guys, social guys, Zynga, what have you, all going out there trying to get out ahead of Facebook. Facebook comes out, a few others. Zynga, of course, tanks. And it seems like the bloom now may perhaps be off the rose, finally, of the IPO. People are realizing there's a lot of burden that comes along with this. It isn't this great, grandiose license to print money like it was in the mid to late 90s. There's a lot of, like I said, regulatory burden that comes along with it. There's a lot of people peering at your private business, which if you're a very private company, you perhaps don't like that too much. A lot of people having unrealistic expectations of what it is that you do and what the outcome should be. And so a lot of headaches that come along with that capital. I think some people are finally realizing that perhaps the better trade would have been perhaps to stay private all along. So, of course, we have the big deal, Dell going private again as well. That seems to be very much the trade du jour these days, is gobbling up your company and going private again. Of course, you're right. The time to do that for CBOE would have been 1920, not 35, 36.
Yeah, I drive home in my little German truck, and all my dash lights are going to go on after I say this. But when the Germans bought the ISE, they paid almost $3 billion for the ISE, and it was great to be on the receiving end of that. No bones about it, and everybody was valuing things, at the $700 CME value. And you look at stuff, and trading volumes are not great. The exchange business is difficult, with the exception of proprietary products, and the CBOE's got two of them, but one of them's got a clock on it, so that doesn't make life easy. As I mentioned, there's $1 billion worth of real estate, and that's not going to be an easy transaction. One of the things you learn, and one of the things you see in all these exchange mergers, is there is some money made in trading. I'm not denying that there's some money made in trading, but there's a phenomenal amount of money made in clearing. And if you look at the enterprise value of things like the CME, a lot of that is the monopoly clearing. Same thing with Eurex. A lot of the value was Clearstream, and a lot of that had to do with why they couldn't get to New York. If you dig down into the NYSE Euronext ICE deal, you saw that even if the deal isn't consummated, the European future side is going to go clear ICE clearing in Europe, and that's worth a lot of money. But it's tough to get those deals done. And, of course, now that I've said that, tomorrow there'll be an offer, and I'll end up looking like an idiot.
That's how it works on this show. But you're right, Alex. ISE really had the foresight to go public in that time when everyone was still giddy from the CME. It seemed like when the CME did go public, it was a very interesting development because it seemed like almost overnight, all of these analysts and all of these other people out on Wall Street, and particularly in the New York equity markets, it seemed like they suddenly awakened overnight to the profit potential that was lurking out here in these quote-unquote derivatives markets all the time, even though they never really understood them, never really paid attention to them. And it was shortly after the CME went public that all of a sudden, at all these industry conferences and events, suddenly we had analysts showing up, and people were coming in and speccing on seats for the first time that I could ever recall, at least in any sort of substantial way. We had hedge funds showing up on industry panels talking about why they were buying seats en masse. It was a very heady time in the exchange space, and ISE capitalized on that. Of course, it kind of came back to bite Eurex, Deutsche Börse a few years later when they had to write down a lot of that. But still, interesting stuff. Since we're on the exchange tip and going down the exchange rabbit hole, I will mention one other thing. Every year at the big options industry conference, they kind of give out what's essentially a lifetime achievement award. They call it the Sullivan Award. I'm not sure if you saw this, Alex, but they announced this year's recipient is going to be Sandy Frucher. He was the former CEO of the Philadelphia Exchange, the Philadelphia Options Exchange, aka the PHLX. And interesting choice, I think, for a lot of people in the business. If you're aware of what happened at Philly, of course, that was a struggling exchange, to say the least. They were kind of circling the bull. He gets a lot of credit for turning that exchange around, but I think a lot of people also kind of wonder exactly what they accomplished over there, because at the end of the day, he kind of gave that exchange away to a consortium that included Merrill and Citadel and a few others. they promptly turned it essentially into a private crossing house for their own trades. And then they flipped it a few years later to NASDAQ for, I think, something along the lines of 10x what their initial investment was. So it was a great trade for them all around. Of course, there was a big shareholder revolt, a seat holder revolt, I should say. They sued the Philly. And then, of course, Philly has kind of become, in this day and age, really the bastion of the div trade, and not much else really going on over there. Some interesting new products, but nothing really coming of them. So I don't know. Interesting choice, I think, to say the least, is giving it to him. Certainly won't lack for controversy. And if I know him, he certainly will make an interesting speech at the very least.
Yeah, the best ticket in town used to be Brodsky and Sandy on the same panel, and everybody was polite and reserved, and then Brodsky and Sandy
it was great. I used to always make time for those. Those were great.
Yeah, it was almost like CNBC the other day when they had Icon and Ackman on, and they were swearing and screaming, and you sit there and go, man, I really turned the volume up on CNBC, but this was great theater. They were great theater. The Philly was a tough franchise, and technology was an issue. I don't know if you've ever been on the old Philly floor, but when I was at the CBOE, I used to get to Philadelphia a lot because there were a lot of money managers there. And, the Philly essentially was not one of the glowing exchanges in terms of growth. And to your point, they turned it into kind of this private crossing environment. And, we could do a lot of time on div trades and what it has and hasn't done to the business. And there's a lot of opinions about it. I don't think it's been favorable for the business, and I think it's driven a lot of business upstairs, especially the macro funds. But Sandy's an interesting guy. He's colorful. It's going to be a great show. And the Sullivan Award is I used to sit on one of the committees that we used to discuss the Sullivan Award. And again, it's great color because the committees would be sitting on the phone and we talk about who the candidates were, and people would be very vocal and colorful about no way in hell that person's ever getting the award. And then a month later you saw the person who said no way in hell smiling and handing the award to the guy. So it's a lot of local color in the industry, but it's an interesting time with Sandy.
Yeah, it certainly will be at least a fun presentation, and certainly not a choice that lacks for controversy. And speaking of controversy and perhaps notoriety, it is time to close out the old trading block and roll right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we don our fedoras and wade carefully into the seamier side of the options business. We're going to kick things off today. Actually, I think most of today's Odd Block is really going to be thematically a review of activity we saw going up yesterday. Because a lot of stuff goes up in between our shows. We don't have a chance to really hit on it, so I thought today would be a good chance to look at some of that. I'm going to kick things off with a name we don't really discuss that often in the Odd Block, if ever, that I can recall. It's Hess. Of course, the Hess Corporation, every little boy loved their Hess truck when they were a little boy. And this is, of course, a name that has been making some headlines of late because they have a typical story, activist investor making a lot of noise at the company, looking to perhaps break things up, spin things off. And the market seems to overall really like this, what this guy's talking about. The stock's been rallying quite a bit ever since right up leading into earnings. It was trading around 58, closed today at $68.35, up about 10 handles over the past few weeks. So not a bad ride. And we saw a lot of people yesterday, the 13th, really going in. We saw it on Bloomberg and other outlets really writing up all this activity in the Feb 70s and how call activity is really active. And of course that is true, but we also saw a lot of that stuff. Feb 70s, they had 2 days to go for the most part. It wasn't a lot of opening paper. A lot of that was closing. A lot of that was also rolling out to March. We saw some March upside as well, March 72s and March 75. So there are indeed some people out there for the most part piling on to the upside, thinking that this guy is not done really saber rattling over at Hess. And as a result, this name still has some room to rally on the upside. This is the name usually doing about 12,000 contracts a day of late. Of course, that's already inflated given earnings and giving all these other developments. Did about 14,000 contracts today, so even higher than their typical average, already inflated numbers. And like we said, the bulk of that activity really being focused on the upside and on the call wing, the call portion of the skew. Next up, we have Constellation Brands, ticker symbol STZ. I know this is one of my biggest holdings. I don't know about you, Uncle Mike, but I can't. Every day I turn on my tickers, turn on my screens, and the first one I check is none other than Constellation Brands. This name closed today $43.75. They were up a whopping 37% today, and what we saw is apparently some very well-timed paper, just put it mildly here, in this name. Of course, this is a name that's been putting up some numbers of late in terms of volume, doing 20,000 contracts yesterday and doing 400,000 contracts today. And of course, there's a deal going on out here. So of course, whenever you have M&A activity, this is the big. They're involved in this big InBev Group Modelo deal. This acquisition of Grupo Modelo. So that, of course, driving up the stock quite a bit. Investors liking this. And we saw someone yesterday, let's just say, being very fortuitous with their timing, buying the Feb 35s. Again, 2 days worth of premium in those options, so they were essentially dailies. We saw them going up about 1,700 times yesterday. So someone picked up 1,718, I should say to be precise, of these contracts for a nickel. And it looks like people were speccing on a buyout, and this guy, if he was indeed doing that, this guy really hit it out of the park. These options are now trading. These Feb 35s went out today, $8.70 at 9 cents. So at $9. So
that is well timed.
That is, I think, the definition of well timed and perhaps unusual and interesting, and all the other things we like to ascribe to our activity here in the odd block. A nickel to $9. I think I'll do that trade 1,700 times.
You know what else popped today that's kind of in the same industry that there's been a story kicking around for a long time was Beam popped a buck today, and it looks like a lot of people are starting to think the whole group may be into some kind of consolidation play.
As you were talking, I was just doing some quick math. That's a cool about $1.5 million, Uncle Mike, for a one day's worth of holding.
You beat me to the punch. I was doing the calculator just too. There's a nickel at 1,700 contracts, so.
A nickel to $9. So essentially made $9 on that trade 1,700 times. Not a bad deal.
Not at all.
I would do a few of those, I think.
So is there a lesson there from the customer who was short? Because we've talked about this frequently. The person who doesn't want to buy him back.
Spoken like the diehard education man that you are, Alex. I'm glad you brought that up because, yes, that is the flip side of this very dubious coin. That is, of course, the poor sucker who had those on, saw those going. Of course, if you're short those in a takeover name and you're not closing them out, then you're doubly stupid. You know, this is not some crazy flyby name that's just, trading $10 forever and it suddenly gaps up to 20 overnight. This is a name that was in play. So if you're trading a name that's in play, you're short at the money calls, they're at a nickel, and you're not buying them back with a day to go, 2 days to go. Why are you listening to this show? Because you obviously heed none of our advice.
Absolutely.
Maybe you listen to throw it back in our face. Maybe you listen because you hate us. I don't know. But you're certainly not listening to what we have to say.
It was $8,500, Mark. It was a 98% probability. You got $8,500 on that 1,700.
Yeah, what can go wrong?
Yeah. So that's, I think I have a couple others here that are interesting, but that one really, I think, just takes the cake in terms of great timing and great everything else. So maybe we'll just close it up there. That one is just fantastic.
I think that's the most impressive trade we've ever done on this show.
I'm trying to think. We've had some good ones, but a nickel to $9, that's pretty good. And these are 2-day options. He literally he swung for the fences with 2 days to go and knocked it out of the park. that really is the definition of dubious when you want to put it out there. You think if you're going to do that, maybe you want to cover your tracks a little bit. Maybe you go out to March or maybe a little bit beyond that to say, hey, I wasn't sure when it was going to happen. I was just buying longer term. It's kind of hard to argue when the regulators come knocking and you buy 2-day calls that you didn't know something was up.
Yeah.
I was just rolling the dice, Your Honor. I didn't know. So yeah, interesting stuff. Again, we're not implying any illegal activity. We're just saying it certainly raises our eyebrows. That's what the fedora is for. It can imply everything else. All right.
Maybe it was a senator that did that trade. It's legal for them.
You're right. Well, actually, they changed that finally after that big hullabaloo that they made, and we of course talked about in the show about a year ago that it was legal for them to do all that.
Oh yeah,
they finally came out and changed that. So. It could have been a staffer, though.
There you go.
Certainly, we've seen a lot of those. I remember that I talked about that trade many times, where when Rubin resigned unexpectedly from the from the Treasury, and the pit lit up in the SPX. Everyone lifting offers on puts. That certainly wasn't him. That was all of his staffers and everyone else who heard that announcement coming out early and were just lifting offers on SPX puts. So certainly the hangers-on are the ones who tend to act on this stuff quite often. All right, that is going to do it, like I said, and now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express Block. This is the portion of the program where I get to rest my tired and aching vocal cords, and I toss the show over to the capable hands of one Alex Jacobson. Alex, speaking of the Sullivan Award, I'm waiting for the day when you get yours. When are you getting your award, Alex?
As of right now, I'm not on the calendar.
If anyone merits a Lifetime Achievement Award for the options business, I would certainly say you can throw your hat into the ring.
Well, it's very kind of you to say, but having worked at 2 exchanges, that unless you end up being president of one of those exchanges, it makes it difficult, because when you leave one, you don't enamor yourself to much of the community. So
that's true. You have 1 or 2 exchanges behind you who may or may not be voting in your favor.
Yeah, and I've left 2 of them. So when I came to CBOE, the president of the exchange was a great guy, Chuck Henry, who had been at the CBOE, left to go literally get the P Coast into a good state, and then came back to the CBOE. And I remember some of the people at the CBOE saying the only way you get to those 7th floor positions is to leave and come back. So it's really nice of you to say it, Mark, but I doubt I'm a recipient. But if nominated, I will run. So
there you go. So Sullivan Awards aside, what else is going on? What's cooking over in the land of OX?
It's kind of redundant. It was a quiet day with the exception of Facebook and BlackBerry. And as we mentioned on the show a couple of days back, we had a new pricing scheme in futures. And I sit right across from the futures guys. And they were remarkably busy today. Now, not all futures are expiring tomorrow, but just a really active tone here between the 2 desks. And the option guys are still around. I mean, they're all still on the phone. They're all still around. It was a blast to be here expiration week, even though the market was still, relatively quiet.
How's that old OX put call indicator looking these days?
Puts are almost 10-1 calls on the short side.
Wow.
And, I think a lot of people who work in the industry, I always characterize this of former market makers too, who just generally had a bearish side to them. We're at 0.99, so literally almost 10-1. Put selling in a low vol environment. This market's going to do something. I don't know which way it's going to do it, but this market's going to do something. So it's interesting to watch. It's going to be interesting to see how this unfolds. What will be really curious is where we are a month from now when we go into a triple witch expiration. I think the March period, and I'm counting March as starting today, even though it's not the calendar, but it's the March option cycle. I think this is going to be a real interesting month. And of course, when I say that, I immediately get emails that go, I hear you're bearish or I hear you're bullish. I just think this low vol environment with the general sentiment of what's going on, I think we're going to see some interesting things happening in the next 4 weeks.
Alex, another thing I think we could touch on that is very much top of mind right now in the option space. You know, a few months back, everyone was up in arms, very excited about the prospect of these minis, and they were very almost let down. I know a lot of our listeners let us know, and a lot of our readers let us know on the website that they were upset that they had to wait till March to trade these mini apples that everyone seems to be fixated on. Of course, it's going to be mini everything, but Apple seems to be the name everyone's fixating on. Now we're closing in on the launch of those, or about a month away, and it seems to be, at least from what I'm hearing in some of the other aspects of the brokerage and exchange space and the options realm, that perhaps some of the bloom is coming off the rows of the minis, because the devil in these is always in the details in these products. And certainly when they were conceived, they were very interesting, but now actually implementing them from a programming perspective and a margin perspective, how do you program in these 1/10 size symbols and contracts? Certainly, how do you margin them 1/10 versus the large contracts? Because you know people are going to be trading them that way. So a lot of interesting stuff. Is that kind of the scuttlebutt you're hearing over there at OX, that people are probably cautiously excited about them, but also maybe grumbling a bit under their breath about how they're going to get this stuff implemented? I'm also hearing some firms might even delay their launch. Is that going to happen over at OX too? Do you know?
Well, I checked with the product development people, and I actually have a class for product development this afternoon, and they say we're ready. They say we're on track. In terms of how much effort, I'll tell you one quick story. That's, I started my options career at the CBOE, and CBOE, back when I was there, had unquestionably the best technology, and oftentimes we would want to innovate at CBOE, and other exchanges would drag their feet. I mean, a lot of the innovation today occurs in the OCC boardroom, where things are proposed, things are voted on, and many times you'll see that the bottlenecks to getting things approved through OCC relates to the robustness of the technology. Right now you have 3 exchanges that do under 4% share, which means they have phenomenal technology costs to keep up with things. And you've got a lot of the smaller brokerage houses that are now clearing Apex. Apex is a terrific firm. But one of the issues with a lot of the smaller firms is it's a big investment. And here we'll be ready on March 18th, but it wouldn't surprise me if there's some foot dragging going on by some of the people who have just less robust technology.
Yeah, it has been a rough time, you're right, in the broker space as a whole, with the Apex and everything else going on, people getting squeezed on all sides in terms of collateral for clearing and everything else. Now to have this added cost, even though these products are probably going to be a boon for the industry overall, I think in the near term, some people are looking at them as, oh, wow, more expense for us. Even though if anything is going to start turning around the volume numbers and get retail back in the game especially, I can't imagine a smaller Apple contract not helping in that equation. It sounds like certainly that's going to be a home run. So yeah, look forward to that in about a month. March 18th, we'll launch those mini apples. Maybe Uncle Mike, you can start doing strategy blocks. Instead of one weekly versus another weekly, you can start talking mini weeklies versus mega or regular standard months, and all kinds of fun stuff going on there.
Arbin minis versus the big contract. I love it.
There you go. Something to keep that BBI nice and low. All right. Thank you for that, Alex, and indeed, Uncle Mike. And now we're going to keep on rolling with the show and roll right into a real quick mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and as they say, brevity is the soul of wit, and several of our listeners took that to heart this week. Maybe it's just the medium. We have a lot of Twitter questions this week, and the Twitter questions always seem to be fun from a formatting and grammar and perspective. This question this week rolls in from Philip001, and he says, when SPX options? I'm sorry, when SPX daily options? So there you go. This question is an interesting one if it's formatted a little strangely, but it's an interesting question nonetheless, and it gets to, I think, the heart of some of the things we've been talking about here on the show today, certainly on the exchange side and everything else like that. If you haven't been around options for a while, I don't think you really can understand the reluctance that exists in a strong part of the community, particularly on people who've been around for a while at the exchanges for a long time, at trading and brokerage firms for a long time. The reluctance of anything to do anything that would even remotely cause any sort of comparison between options and derivatives and gambling. Because, of course, there is this overwhelming context in the broad media, financial media, and everywhere else, and in many of the investing public, that derivatives are essentially wild, reckless gambling. And so, in fact, this is a business that it's been around for over 30 years, but wouldn't even have a conference. We have an annual conference every year. Wouldn't even have a conference anywhere near Las Vegas, simply for that reason, to not have the any sort of connotation of gambling. They wouldn't do Vegas until about 5 years ago. They finally shrugged off that shackle. And I bring that up because when people ask me about SPX daily options or any kind of daily product, I think the answer is twofold. A, it is inevitable. They will come. I mean, look at the success of all the other mini, shorter duration contracts, the weeklies, these other minis coming out very soon. It's inevitable that we will get there. However, it's going to take a while. I really wouldn't hold my breath for daily SPX anytime soon, given all the different exchanges I've talked to over the years, and many of their heads and many of the people at them just are so reluctant to do anything that gives that gambling connotation. And a lot of people see daily contracts, for whatever reason, falling outside that typical mold of an option that should be used for hedging and other things like that, and leverage and income, and whereas the daily contract really is very highly speculative in nature, and it tends to lead towards that gambling conversation. So while I think it will happen, I don't think you should be prepping your trading account for daily SPX options anytime soon. What say you, Alex and or Mike?
They'd have to cut fees. The SPX is the most expensive thing to trade. The VIX and the SPX. I mean, everybody talks about payment and brokerage house economics. Basically, you'd have to cut fees, or it just wouldn't be a profitable product for the brokerage houses to support, or they'd have to surcharge it.
Yeah, if you start slapping surcharges on a daily product, that doesn't exactly do wonders for the volume.
Yeah, I mean, having grown up in the exchange community, periodically you'd see somebody listing a daily. Often it was in the foreign exchange market, and you'd say they're just in trouble and they need revenue. Now, that's not always a fair characterization. In foreign exchange, it was essentially the ability to do an overnight swap. You do kind of an exchange for physical, but the challenge in SPX is it's just an expensive product to trade. And if you saw dailies in the SPX, you would, of course, see dailies in the Spider. And to Mike's point earlier about would there be an ARB opportunity, there'd be a regulatory ARB opportunity in the cost of trading the SPX, because there's still a fee attached to it, and it would be a tough product to support.
I think you're coming down on my side of the fence for a different reason, but at the end of the day, don't hold your breath for daily SPX anytime soon. All right, thank you for that question, as strangely concocted as it may have been there, Philip001. And thank you to everyone else who wrote in. We'll certainly get to your questions on a later episode, but now we have to keep this train rolling. Our next stop on the old option block train is none other than the strategy block station.
The strategy block.
You know, here it is. Leave it to a bunch of degenerate male traders to forget that we are recording on Valentine's Day and not take that into account in our show. But leave it, of course, to Uncle Mike Tusaw to correct that for us, because it is Valentine's Day. A lot of people on this day look for all different sorts of relationships, including the old friend with benefits. And Uncle Mike, in that theme, is embracing that concept and taking it to the next level when he discusses today the credit spread with benefits. So have at it there, sir.
Alrighty.
How's that for an intro?
There you go. Actually, I wasn't even thinking that way. I was just thinking about how cool this credit spread would be, quite frankly. But
that's why they pay me the big bucks.
Now that you reminded me, I got to get out and get some flowers real quick. So thank you for reminding me of that. But anyway, let's say that you have a stock with which you are doing collars on, and the stock's a little bit higher in value than you would like it to be. Now, traditionally, we've talked about this on the show before, and this is a very common option strategy. You sell a put below where the stock is trading, and if at a price with which you would be happy to own the stock. And the benefit is that you get paid for waiting, so to speak. And when the stock goes down to your level, you're happy to own the stock at that level anyway, and you got paid to do it by selling the put. So what I want to go through today is a way with which you can do this with a spread and have a hedge in place. So let's say, for example, XYZ stock is trading at $38 a share, or let's even say like $36 or $37 a share. And I'd be happy to own the stock at $35, and I'd also like to put a collar on it when I own it. Now, I can tell you just from experience, if you're selling a put to get into something, it's very difficult to turn that into a hedged collar once you're in it, or it's a very stressful, nerve-wracking thing. But let's say that you're looking to do a collar on it once you get into it. That's where the credit spread or the diagonal credit spread can come into play. XYZ stock's trading at $36, $37 a share. We're happy to own it at $35. So what we can do is we can sell a front month 35 put and then simultaneously buy perhaps a 2-month 34 put. Now, a lot of times it obviously depends on the stock and it depends on the option pricing, but whenever I go about doing this, I like to get a little bit of a credit on. So it's still technically a credit spread. And by doing this, if the stock goes down to the 35 level, where I'd be happy to own it anyway, great, I own it. And I have a put in place already for my hedge leg of it. And then once I own it, that following month, I can sell a covered call on it at the 37, 38 level, whatever the case may be. And I'm off to the races and I'm doing my collar strategy. Now, let's say that the stock doesn't get put to you. Let's say that the stock expires or it's close to expiration around $35.10 or maybe a little bit above that, and you can get out of that put for a nickel, let's say. Well, you get out of it, and then you can either turn it into a credit spread for the next month, or you can just simply get out of the trade for whatever money's left in that long put option for a small profit. So let's say there's a stock that you like and you'd like to collar it because you feel it's fairly volatile, but it's a little bit too rich for your blood at the current time. The credit spread with benefits is something to consider.
So there you have it, dear listener. You'll be tuning into this the day after Valentine's Day. So if you did indeed forget to get your significant other a nice present, or perhaps you have that lovely lady in your sights and you want to take your relationship to the next level and you're scratching your head about how to do that, well, I think you just sit them down, buy the computer, buy your iPod, buy your iPad, or whatever your device of choice is, and play them the Uncle Mike credit spreads with benefits segment, and I think you'll be well on your way. Let me just put it that way. Nothing gets the motor running like some Uncle Mike credit spreads with benefits. So there we go. With that perhaps disturbing imagery in mind, we will roll on to our final segment, Around the Block.
Around the Block.
All right, and welcome to our final segment, Around the Block. This is, of course, where we look at our trading screens, tell you what we're keeping an eye on for the next few sessions. There are still, of course, some earnings on the horizon. We didn't hit on the top of the show, Uncle Mike, out of deference to you, sir. But Cisco, of course, had earnings earlier this week, and the market not exactly liking what they were selling. They were warning, I think, about some European weakness in demand, and the stock took about a 1% hit on the day. So I'm sure you're not exactly crying your eyes out over that turn of events for Cisco, but nonetheless, that was an interesting one. We had, of course, GM this morning, another one the market not exactly looking too favorably on, crushing them down about 3%. I'm looking forward to next week. We have Marriott on the 19th. This is, of course, the hotel and timeshare chain. A lot of interesting stuff going on there. Actually, I think they spun off their timeshare element of late, so I'm not sure which one Marriott, that's just the hotel, that's the timeshare, or which one is which. This is Marriott International, ticker symbol MAR, and of course one we like to talk about on this show quite a bit. Hasn't been in the odd block of late, doesn't really do too much volume, but always interesting, always compelling around earnings, and that is, of course, Tesla. They are reporting next week on the 20th, so unfortunately we won't be on a show that day, so we'll talk about it in a review, perhaps, of what happened during their earnings. But some interesting stuff. Anything else catching your eye for the rest of this week, Uncle Mike?
Not for this week. The big event for me this week was the State of the Union address and listening to the investments in infrastructure, but no, nothing this week for going on the rest of this week. Just kind of a slower time.
So that was your big deal for the week, huh? The State of the Union. Did that get it done for you? Was there enough infrastructure dealing to appease you?
It was just as I expected. We'll leave it at that.
Of course, Goog not making that magic number, the magic 800 level you've been so keen on of late. So I'm not sure what you're going to watch for the rest of this week into next week, Uncle Mike. There's so many things to keep an eye on.
I'm just going to have to concentrate on doing nice things for my wife the rest of the week, I guess.
It's just leaning towards thoughts of love on this, the most romantic of holidays, or perhaps, depending on how you look at it, the most hallmarked up of holidays. Either way, whichever way you want to look at it. Alex, what are you watching for the rest of this week?
A lot of the more traditional names, kind of low vol stuff, trading right up near strike prices for tomorrow. Berkshire today taking out 99. Not a name you think about in terms of doing a lot of options, but there really is a lot of covered writing, overwriting business in Berkshire. Today you had the drillers moving through strikes. So even though it's February, it's not a quarterly expiration. Could be real interesting tomorrow with a lot of the stuff just sitting. JP Morgan taking out 49 today, trades in dollar strikes. Going to be an interesting expiration tomorrow.
I believe you're right there, Uncle Mike. They did indeed have some corporate action today. I think they did acquire Heinz. I know, Warren's a big fan of his 57 flavors.
Yeah, but at 99.21, and there's the last 3 or 4 years that stock has not done a whole lot better or different than the S&P. This year he's had buybacks and the stock has really popped, but it's sitting right near par. So be an interesting expiration tomorrow.
Thank you for that, Uncle Mike, and thank you for that, Mr. Alex. I'm sure your Sullivan Award is in the mail as we speak. But of course, before we go, I like to check in with each of my cohorts here on the All-Star panel to see what they're up to in their respective necks of the woods. Starting off with you, Uncle Mike. I know we're not going to have a show on Monday, so unfortunately there won't be any interview block. But who is coming up next week on the RCM webinar train?
We have Chris Chu. We're excited about having him. He actually has a system with which he buys stocks on. Basically, he's the world's only fundamental option trader, I think. Maybe not the world's only, but he looks for value-based stocks. And what he'll do is he'll create synthetic stock positions in a pretty unique way using options. He'll be doing a webinar on it a week from today, or I guess on February 21st on the Thursday night webinar. And we're excited about having him.
All right, and Alex, what is coming up in the land of OX?
Well, first of all, just a reminder to everybody that Monday's a non-trading day. If you're in New York City, try to get over to the Marriott Marquis for the Traders Expo. Starts the 17th and the 19th. Both the OX crew and the Schwab crew will be out there. February 23rd, a live event in Indy. March 9th, a live event at the Western in Lombard. I'll actually be attending that one. So if they want to find me for the Sullivan Award, I'll be at the Westin Lombard. A reminder that all of our live events, both Indy and the Chicago event, are simulcast. And we're building an archive out. Actually, I was working on the archive today. So at some point, hopefully by April, you'll be able to come to the site and see all the archived live events, all the archived webinars. So if for some reason you can't make a date, you can view them listen to them at your leisure.
Nothing better than listening to things at your leisure. And speaking of doing just that, you can, of course, surf on over to theoptionsinsider.com, where you could listen at your leisure to all of the archived episodes of this program, as well as every other episode of every other program on the ever-expanding Options Insider Radio Network. In fact, a lot of people have been asking for some daily content and other things like that, so we'll be adding that very shortly, including a daily news show and some other daily shows in the works and some other interesting shows that are cooking up here over at the Options Insider Radio Network. And if you're looking for more ways to find us, if you're listening to us right now, you probably already found us, but just in case, we are adding TuneIn as we speak. So we had another outlet. You can, of course, find us on our website. You can find us on iTunes, a place where many of you do find us, or on Stitcher, or now on TuneIn. We're adding a bunch of other destinations as we speak. So this content will be even easier for you guys to find in the future. And of course, before we go, all of us here on the All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing and occasionally sending in some bizarrely constructed tweets for our listening and answering pleasure. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.